Hi everyone, today I'm going to be talking about 3 growth stocks to buy, and I feel like I've neglected the growth stocks in the videos recently. I've not really talked about many growth stocks. I've kind of been focusing a lot of UK stocks, so I'm going to try to do a few more growth stock videos out here, especially US companies as well, rather than just focusing on the UK stocks, because I haven't really talked about them too much. It's just that UK stocks have been at a better valuation in my kind of opinion. But today I'm going to be talking about 3 growth stocks, and if you really enjoy this series, make sure you like that button, guys. Let's try to get to 150 likes, and I'll try to do another couple of growth stocks for you guys to look into. Some of these have been suggested by you guys, and some of them are my own as well, and I'll kind of talk about these companies and what I think of them. 2 I would definitely buy, and one of them I'm probably actually going to be buying this week. I did post on the patrons group about this, so if you want to know what stocks I'm looking at a little bit earlier than when I say like I've already bought them, make sure you join through the link in the description below, and I always post what stocks I'm looking at. But I probably would have bought this one by the time the video goes up, which is the third stock, which is a very unknown stock out there with a lot of growth. And when we think about growth companies really are companies that don't focus on profit. The main thing is just seeing that revenue growth increase massively, and it kind of P ratios go out the window. You're kind of paying for the revenue growth going forward, and it doesn't really matter where the profitability is really at. It's about the revenue growth in general. But my kind of 2 rules when I do buy in revenue growth companies like these is that I do like to see them probably making profitability within 2 years of me buying them, as well as that they've got to be a company that I feel like could be a massive company worldwide, not just like a niche kind of area. So I do like seeing companies that have the ability to take over the world, basically. It sounds a bit like a James Bond villain there, but yeah, those are kind of like 2 things when I look into a company: is profitability within 2 years, and a company that has the ability to be operating worldwide overall. So we'll get stuck into number 1. So number 1 is BYND Meat, which basically is a alternative for meat substances, and it's created by plants actually, and it kind of gets the same sort of texture, the same sort of flavour, even cook very similar as well. And obviously this is kind of done with fake chicken, fake beef, fake pork, fake sausages, and yeah, I think this market in general, you know, for me growing up, I knew a few people that were vegetarians, and they used to have fake meat all the time, and they were like, oh, you know, try this product, and I would try it, and they were like, it's really good, isn't it? It's like the real stuff. And I was like, yeah. And like, as soon as I leave the room, I was like, Jesus Christ, like trying to find the bin and like spit it out. Like, yeah, I've eaten it all. It was like, it was horrible. Like there was a need for decent products to come in this area, in my opinion, because I felt like some of the products in this area, even, you know, 5-10 years ago, were just horrible. So there does need to be better products coming in here, and there is some starting to come in here. You know, BYND Meat, Impossible Meats, and BYND Meats is one of the bigger players in this area. I think it is the 3rd biggest in this kind of industry, and it's done really well to sign deals through like Dunkin' Donuts, KFC. I think it's one of the new ones. So it is signing some major deals, and yeah, the whole industry itself is set to grow at a decent rate overall. And I think like more people generally for global warming sake as well, and just health wise, I think there will be a bit more of a switch to, you know, fake meats going forward. Obviously I don't ever see it taking over the world, but I do see this sector growing at a decent rate where BYND Meats could really benefit from this kind of thing worldwide as well. So BYND Meats, ticker symbol BYND, is a company trading at about 135 now of recording this video. Personally, I would say that I would buy this one. I would be a little bit more tempted under $100. I think that's where about the 200-day moving average is, but I'd definitely be a good buyer at about $70 on this one. I would potentially be buying this one around $70, I think, in my opinion. Obviously it'll trade at a bit of valuation because of the growth side of it, and it is a company that is currently not making profit, but it is forecast to be profitable within the next year. And as well as that, being a growth company, we're seeing growth growing at an absolute rate here. You know, it's expected revenue to be nearly doubling from 2020 to 2021, and same again from 21 to 22. Same again, expected to double, and it does slow down after 2022, but it's still going to be growing at an absolutely huge rate, which is fantastic. When we look into the debt to equity, it does have 7.8% debt to equity, so it's not a bad balance sheet for a growth stock. 30 million in debt, but it is holding 246 million in cash. So overall, as a financial kind of view from Beyond Meats, it's in a pretty healthy condition with such an amazing growth as well. And the only little downside is the amount of people that have been selling shares in this company. There has been a lot of shares, or a lot of shares being sold in the company. That's the only kind of little downside that is here. You know, you would kind of hope that they were holding shares, but you know, it's quite a recent IPO, so a lot of people will be like, oh, and you know, it's so much easier to sell shares now, I'll take some profit. So yeah, there is a lot of people selling shares. I can understand why, with it being such a recent IPO, but there has been a lot sold in general. But yeah, overall growth is fantastic. Health wise, it's pretty good. And yeah, I think there's a really big market for this company going forward. Next up is Virgin Galactic, which is basically the ability to take people, or normal people, if you can say that, into space and kind of get that weightless feeling and also the incredible views. It is going to be a expensive trip to space, so there's not many people that can afford this, but it's basically going to be about 250,000 to get one of these tickets to go into space. The likes of people like Justin Bieber, Leonardo DiCaprio are people that have already bought tickets, and there's already quite a few tickets sold for this experience. And I can imagine if you have the money, it would be a pretty good experience to kind of get that weightless feeling in space and say like, look, I've been in space. But like I say, it is for the limited few that could be, you know, that can afford it. And I think it's one of those, you know, if you've done it once, will you want to be paying it again? You know, that's one of the things that I would say about this one overall. The ticker symbol for this one is SPCE, and it was a stock that did shoot up recently on its IPO, but it's now dropped down to about $19 of recording this video. So yeah, it's kind of just been trading really flat recently since it's actually IPO'd on the stock market. When we look at the growth side, revenue is expected to explode quite a bit. You know, revenue probably doubling over the next few years, but as far as profitability goes, it's still going to be quite a fair bit off profitability. By 2023, it's still not expected to actually make a profit on the company side of it. Financial side, it's not too bad, to be fair. There's no debt, so 0% debt to equity. It does have 419 million in cash. So like balance sheet wise, it's actually pretty good. The big problem with this one I have is obviously the actual, like, how much of a worldwide basis could this company do, and I think it's very limited to its audience and how many people are willing to do this eventually twice. You know, how many people have 250,000 to spend on a ticket to space. I mean, it would be cool, but for me, because of it being so far off profitability, and also because of the limited spectrum of how many people can use this one, I have to give this one a void. But for some of you guys, you might be looking at this one and might be feeling, you know, willing to take a punt on it. So I thought I would put it on this list. But overall, I think for me, I want a company a bit closer to profitability and a bit more of a company that will be offering to many people rather than a few. So for me, it's not a buy, but for some of you guys, you might actually like this one. And the last one is a company that I'm actually looking at, well, probably would have bought by now by this video's come out. And it's someone on my subscriber list actually commented down below, this growth company, and I looked into it and I was like, this is really good. So I don't know who that person was, otherwise I would mention you in the video. So I'm really sorry about that, but I might have about 10 people in the comment section going, that was me, but yeah. So the next one is called GAN. And basically this is a software. It's a bit like Shopify, but for online gambling and like online casinos. So basically, if you don't know what Shopify is, it basically gives people the platform to sell online through their platform, and they take some sales. Now it's very similar, GAN is very similar to that, but basically it's for casinos. So this will sound like crazy to people in the UK, but basically online gambling has been illegal in US states for a very long time, and it's still illegal in a lot of states. I think there's only 10 states that allows online gambling at the moment, and it is growing to more and more states. And you think as well with the coronavirus and, you know, casinos shutting down, this is going to be really important for them. But basically all these states are now allowing online gambling, and for these casinos, you know, obviously they've got to build this platform to set up online gambling. And GAN basically has this software, and all they need to do is kind of put their images on and everything like Shopify does, and they can operate as an online gambling platform, which is, you know, massively useful for a lot of these casinos to set up nice and easy. And then what BYND does is they actually take a 10% of the revenue cut from everything that comes through their platform. So yeah, it's basically the Shopify for casinos, online gambling, and it has a lot of potential to grow. And I really like this one, especially when you think about the economy that we're in right now, and you think about how many states is still yet to, allow online gambling. This is going to be a really big, massive growth sector overall. Now, this company does okay already with some decent revenue. It's on the verge of profitability as well, decent profit margins, and it's just announced on its earnings report that it's not just said just yet, but it's got a new massive partner that has the potential to basically double the revenue over the next few years as well that the company already does. So when I'll show you the Simply Wall Street projections, that could just be smashed out the window already, because just from this new partner that they announced in the earnings call could basically double the revenue in the next year, which is absolutely fantastic. And I feel like I could basically give this video, or this stock, its actually own video. So if you would like that, let me know in the comment section below. But yeah, it's a recent IPO. It's not been on the stock market that long. It's only been on the stock market for about 2-3 months right now. So it is a recent IPO, which is something just to be a little bit careful of. There'll be that volatility, people wanting to sell out the stock in general. But when we look at the the revenue growth, obviously we can see that it's a company that is forecast to make profit this year, which is fantastic. And then when you look at the revenue growth, it will be growing at a decent rate going forward. It's expected to kind of have a flat revenue growth, but then grow by 30%, and then it's expected to nearly do something around about a 60-70% rate. But like I say, if this one partner comes through, which it said it's just signed the deal for, it has potential to even double its revenue in 1 year, which would smash a lot of them Simple Wall Street projections out of the park already. So yeah, from a company's point of view, it's just signed a massive contract with a lot of potential with the amount of states that are allowing the online gambling side of it, and casinos need that right now with what's going on with the CV. Balance sheet wise, zero debt, so 0% debt to equity, which is great. So we've got a growth company with a clean balance sheet. Also 6 million in cash, which I don't think it'll need loads of cash because it's an online company basically, but it might need to raise a little bit of cash. But yeah, overall, it's a pretty decent growth company with no debt on its balance sheet in general. So guys, those are the 3 growth stocks to buy for this video. Let me know any growth stocks you're looking at. Let me know what you think of these 3 growth stocks and if you're buying any of them. And as always guys, smash that like button, subscribe if you haven't, and I'll see you in the next video.